is April 22nd. We are in a trade on oil on 8th range. Our trade reached our first target. Why in the world am I taking long on oil? Have I gone mad? Yes. I am so certain not to acquire trend position anywhere at reversal zone. My guiding light 1 hour told me so. This is reversal zone. This is where knowledgeable traders would never ever ever acquire position. We've been monitoring endless bullish corrections, and finally we had taken ADV long trade. I spelled out my second target 102.26. I expect selling pressure at this level. Oil is taking a pause, as we knew it would. In order for my trade to migrate into a larger time frame, it has to blast through reversal zones on 8th range. But you can witness this magnificent dance. Decision point 1 was respected. Oil struggled how many bars to blast through this level? Bar 1, 2, 3, 4. And finally it's blasting through. The beauty of the price never ceased to amaze me. I'm trailing carefully. My second target is in. Here it is. Reversal zone on 8 is as respected as reversal zone on hourly. But don't be fooled, it's only temporary pullback on the current wave structure, as eventually expect oil to collapse drastically lower down. 101.29, 142 and 99.09. But I respect what price is telling me on the current structure, because we are day traders. Formula remains the same. It don't matter what I trade. Is it 8 range? Is it monthly? Is it weekly? Will S&P do the same trade as oil? This was our torturous dance. We sat in profit on S&P for an hour because of decision point 1. We did not take a trade on S&P because we were close to decision point 2. We play by the rules. We don't take random entries. We're waiting for reversal zone to play out on S&P, just like it's playing out on oil. Patience and discipline is the key. Rule-based trading without any indicators is what matters. You can trade on any instrument and any time frame. If you can't trade pure price and Fibonacci. So here it is. I expect huge selling pressure. This is my second target. Respect the levels. We're witnessing response on oil as we knew. Our trade will stage a reversal, correct? How predictable can the price be? If you know where reversal zone is, you monitor for reversal. I could be shorting oil at any time. So let's recap. This is what oil had done on our guiding light 1 hour when it came to reversal zone first time. Powerful few hundred tick reversal. Once again, second time, magnificent 120 tick reversal. And here we are. Oil is struggling between the levels. Reversal 3, reversal 2. Chances of oil blasting through this level is not very high, pips. As I know, oil is heading drastically lower down, eventually. We are day traders, we respect these levels immensely, especially if 8 range pointing up to this huge selling pressure. Clear? That's the magic of the price. Precision is the key. And just as expected, S&P taking a bit of a pause. It's not that far off from reversal zone. We're monitoring S&P very carefully. We separate corrections from reversal and we take a trade. Reversal zone played out marvelously. Once again, reminding you how essential it is to know where not to acquire position and where to take profits off the table. That is exactly why it's essential to respect reversal zone. Reversal zone struggled between two levels. As I stated earlier, it would be a complete shocker if we'll get drastically more power as wave is pointing drastically lower down. We are day traders. We had taken this corrective wave on 8 range chart for 15 ticks, 2 targets. Happy Tuesday, everybody. Patience and discipline and simple price. Just simply magnificent. Can never get enough. So after we had taken our fabulous trade on oil, oil went into correction mode and not giving us any meaning. And this is what separates knowledgeable trader from trader who is driven by number of trades versus quality of trades. There is absolutely no meaning here whatsoever because oil's still doing dance at reversal zone levels. We ain't touching this. So this is exact same thing that's play out currently on S&P. S&P is taking a major pause for the last hour, giving us only corrections. Unless S&P will give us powerful push to the downside, we're not touching a trade at these levels. This is precisely the key to your trading success, to separate corrections from reversals. So let's take a look at what played out this month. It had been very sleepy months. We had drastically lower number of trades this year, 2 or 3 times less, because markets had been not as volatile. And when we come to the trading room, the market's dancing in corrections, and we do not take a trade. It's absolutely essential to respect that fact. Just like it's essential to respect the fact that very powerful formations setting up prior to the trading room open and outside of trading room hours. That's why knowledge is the key. So here we are. 16 trades total, 12 trades made it to my first and second target and further out. This was my last trade on S&P yesterday that made it through all of my targets. That was a 4-point rally that blasted through all of my targets. Our patience and discipline paid off marvelously. Again, 16 trades, 12 went to our targets. This is typically counter-trend trade. If market's stuck in wave 2 and 4, I take a trade and I spell out. It's aggressive. Our students trade only trend inception and trend continuation. Our students do not take aggressive counter-trend trades. Nevertheless, clearly, success rate remains 80%. If you do not take counter-trend trades, your success rate is drastically higher. Just like you can take trades, again, outside of trading room hours. Oil, similar story. Lower number of trades, still success rate remains at 80%. 14 trades out of 18 made it to first, second target. A lot of times I take decision point 2 as my first level. Quite a few times even outside of decision point 2, if that's what price spells me out. Here we go.